So today's conversation has been interesting, hosted by three great people, three great companies. We have the Standard Investment Group, we have our very own member, independent, long-serving member of Muthaiga Golf Club, Mr. Kahio, James Kahio. I think a lot of you have met him. And then he has his team. We have Karen, who is going to be our main speaker, and Caroline. So they represent Standard Investment Group. And then we also very well sponsored also by Africa's Pocket, represented by the CEO, Mrs. She's Mrs. Valentine Njoroge Risho. And Mr. Richo is at the back. You can wave. He's also works in the company. And then, and they think there is a few people from Africa's Pocket. So if you could just stand. So that's Koi. And they have a lot of their friends as well. So I'll leave the rest of the program to our able moderator, Ms. Valentine, who will take us through the session, and then we shall then reconvene and see what next. Welcome.
Asante. Good evening, ladies and gentlemen. I'm very excited to be here talking about money once again. And today I'd like to start us off with an icebreaker before we do introductions. And the point of today is for us to open our minds and really open our options up to what you can invest in, what's possible, what's fun, what doesn't work, what are the mistakes we've made, and how can we avoid them. So for today's icebreaker, in the table where you're sitting, find a neighbor, maybe somebody you don't know, and ask them, what is the first investment you ever made? When you got money and you decided to put it somewhere so it can grow, what is the first investment you ever made? Then please tell us the real story. What happened to that money? Is it there today? Did it grow? What was your process of getting that to happen? So let's have a chat. Let's make this 5 minutes so you can also get to know the person who's next to you. Awesome. Is there anybody who's willing to share a story their friend told them? If you're not willing, I'll volunteer you. Any volunteers before I volunteer you? Sawa. Thank you, Lady Captain. Tell us the story you heard.
Okay, so the story is from Patricia Ina. She clearly started on the right path. So the first investment she made was to buy 2 acres, which she was recommended by her friend Kachado. So she bought it for 200,000, 800,000 shillings.
Wow.
And she kept it for 5 years and sold per acre 2 million.
Hey, drinks on Patricia.
Not yet. Then she took 1.7 million of that 4 million and put it on a piece of land in Pipoli.
Okay.
Which was 3 million shillings. And 10 years later, she sold it for 27 million.
Makofi. That's amazing.
So many drinks on Patricia.
Many. I think that there are some people who are hustlers, people who they decide they're going to put their money into a product, then they sell it. And I know in high school, there are guys who used to sell CDs. Whoever bought a CD from their classmate? Or a DVD? Or something like that? Am I talking to the wrong generation? Or a tape? And things like that. So that's where we have to start, with some income, right? We have to start with income. And then from there, you decide of your income, how much of it are you going to spend? And then you save some money as well. So that money that you put aside and you save, what is it supposed to do for you? I want to give us a little bit of a framework so that when we're having this conversation, you can have that in mind and you can figure out where is SIB going to help me achieve the things that this money is supposed to help me do. So number one, the first thing that money needs to do for you is protect you, right? So it makes sure that if everything goes wrong, where you land is not the floor, concrete floor, there's a cushion. So some people call this an emergency fund, other people call this insurance. It could even be the house you live in. So the first thing it has to do is protect you. My dad likes to tell me this story. This is a women's event, but I'll talk about my dad. He likes to tell me this story about how in his day, in the old day, when trucks used to go up the hill because they were manual, they had this piece of wood called, does anybody know what that piece of wood is called in Kikuyu? Gakurio. Did I say it properly? Gakurio. It's a piece of wood that's like a wedge. You put it underneath the tire. So that if you continue going up, 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 at some point if the truck rolls back, that thing stops it. So Gakurio is translated to where it dies. So it's where the truck will stall. It's the farthest down you can go. So that's the first thing that money should do for you. Then the second thing money should do for you is make sure that if you need to stop working or if you're forced to stop working, you're still okay. Some people call this retirement. Sometimes retirement is an age, sometimes it's a choice, sometimes it's by force. So from the minute you start making some money, you start putting some aside, so at least you have something to sort you out when you can't work anymore. You're disabled, you're old, etc. Then the third thing it needs to do is make your life fulfilling. So it allows you to travel, it allows you to buy a house, it allows you to drive a Range Rover if that's your thing. So these are your goals, the things that you aspire to, the things that will make your life enjoyable. And then finally, it should allow you to leave a legacy. So you can leave some wealth behind for the people who you brought into the world, or you can have an impact into the world in some way. You can give, you can start a charity, you can become an influencer and decide to help people change their lives. It's really up to you. So it needs to allow you to leave a legacy. And all these things can happen through investing your money. So different investment opportunities will help you achieve different parts of this, of these things that money is supposed to do for you. And today, we will specifically hear about global investing in the global market, as presented by Standard Investment Bank. They are one of the leading investment banks in Kenya. They're one of the OGs, one of the ones that were there at the beginning when the stock market was being formed. And they have very innovative products when it comes to global markets. They're the market leaders in that segment. And so today, I will play the role of moderator so that we can make sure we're not hearing some confusing words that we don't understand. I will be the conduit to help us understand this conversation a little bit better, to ask the questions that we may not know to ask, and make sure that we get all the information that we need to make this conversation useful to us. And so why am I here? I'm just here in my blue dress. Why am I the one standing here? My name is Valentine Njoroge. I'm the CEO and one of the co-founders of Africa's Pocket. And Africa's Pocket is a financial wellness company. We call ourselves a money coach for ambitious Africans. And our job is to help you make plans so that this money that you're making can actually do those 4 things that I've mentioned to you. My background is in finance. I've worked in the States, in the UK, in Canada, and I've helped people manage their money as little as 100 shillings and as much as $10 million. So I'll be able to answer questions in any range. Are there some millionaires in the house? Patricia. So that is the role that I will play today. And I'm very, very excited to have a large team from Standard Investment Bank here to just help us understand these investments in global markets. How do they work? What should we be looking out for? Is it safe? And what can it help you achieve? So are we ready for that? Yes. Awesome. So I'll call to stage Karen Karani, and she'll be the main person we have a conversation with, and we'll start by hearing about SIB and Mansa X, and she'll also introduce her colleagues to us. So welcome to Conversations at Muthaiga, Demystifying Investments in Global Markets. Karibu, Karen. Yes, let's clap for her.
Good evening. Yeah, my name is Karen Karani. I'm a relationship manager with Standard Investment Bank, Global Market Division. With me, I have my colleagues, Carol Chelangat, she's also a relationship manager, and James Kayo, who is an independent relationship manager with Standard Investment Bank. Thank you.
Awesome. So Karen, tell us, who are you? Tell us about you. What is your investment story? What's your journey? And then you can tell us about SIB and Mansa X.
Okay, my background is, my background is in accounting. I actually studied accounting. And then after university, I got my first job in an investment bank. And I have 7 years of experience in the investment banking.
Fantastic. And SIB?
Yeah.
SIB and Mansa X.
So let me start with an introduction to Standard Investment Bank. Standard Investment Bank is one of the largest indigenous banks in Kenya. We are members of Nairobi Stock Exchange, Kenya Investment Stock Brokers. We are also an agent of Central Depository. And we have various divisions in the investment banking. One of them is equity, that deals with shares. We have the research department that does the research. We have the fixed income department that deals with bills and government bills and bonds. And we have the global market department.
Awesome. So you said some very many hard words. So I will focus on the global investments, yeah?
Yeah.
I know that's where Mansa X sits in. Mansa X is a product that, how many of us have heard of Mansa X? Hands up. Any investors? Okay, a few investors in the room. So Mansa X has a reputation in the market for being innovative, but also a little bit opaque. You know, we're not so sure what's going on, what it is that you guys invest in. Can you tell us a little bit about what Mansa X is and what happens over there?
So Mansa X is an investment fund domiciled in the global market department. It's regulated by the Capital Market Authority. We got the license for the Mansa X towards the tail end of 2018. That allows us to invest in the global market, to do the online forex trading. And it's a multi-asset strategy fund that invests in the local and global market. We invest in a wide array of asset classes, predominantly in the currencies, like the major world currencies, US dollar, pound, Japanese yens. We also invest in the precious metals like gold and silver. We do commodities, crude oil, natural gas. We also do Eurobonds, carefully selected single stocks in the global market like the Amazon, Netflix. And then we also do major world stock indices like S&P 500, FTSE, yeah.
Awesome, thank you. So if you're talking to somebody who is just starting their investment journey, someone who doesn't have a lot of knowledge, because you've talked about, you know, S&P 500, currencies, you know,
Yeah.
crude oil. How would you ask us to think about the safety of Mansa X? You know, I think when you started out, was it 4 years ago?
We started 6 years ago. We got the
6 years
license
ago.
towards the tail end of 2018.
2018.
Yeah.
And I believe in 2020 you delivered a very high return, which made news of, if I'm not wrong, 24%.
Yeah.
Did anybody hear about that? 24% return from Mansa X? She says it's 22.5. But recently it was around 18.
Yeah.
So why does it change so much? Why are you able to do 24% in 2020 and 18% in 2024? And is it safe?
Mansa X is a safe investment, but our returns keep on fluctuating. You know, the market is cyclical. Yeah. Sometimes the volatility is a bit erratic. Yeah, but we try and take advantage of the opportunities out there to make a reasonable return for our clients. For the 6 years that we've been in the market, our average net return is slightly below 18%, 17.6. That is net of fees and taxes. Yes.
So with an average rate of 18%, where do I place that in the context of my life? I know government of Kenya right now is paying 18%. So are you saying you're like the government of Kenya? Where do I place you in relation to an opportunity like that?
I think we're in competition with the government bonds. We're in competition with the government bonds. We can't offer a return that is below the infrastructure bond. Yes.
So where do I place you?
Medium risk in terms of what? Yeah,
Talk to the people.
It's medium risk because there's genuine diversification. We invest in a wide array of asset classes. That means that the risk is spread, so many things have to go wrong for us to make losses or to make a negative return.
Awesome. Anything else you want to add about the product?
Okay, the minimum investment is 250. Minimum top-up is 100,000. And then the aspect of liquidity. You can access your money after the lock-in period of 6 months, within 2 working days. Yes.
Okay. Would you like to invite James to talk to us about safety?
Yes.
Awesome.
I forgot to talk about the size of the fund. Right now, our asset under management is slightly above 31 billion. Thank you.
So will you come here? Or?
Yeah, when you come in.
There's going to be a lot of time for questions as we welcome James to come and talk to us a little bit about the safety of this opportunity, what it means to invest in global markets. Is it risky? Will you lose all your money? He'll tell us how to think about that.
My name is James Kahio. I'm a life member of this club. I served in the board of Muthaiga in the early 90s, and when we were constructing the dam. More recently, I've been given a job as a man who looks after the votes when you're casting votes during the AGM. So a lot of guys now have started calling me some funny names. About 2 years ago, this young lady persuaded me to help them grow Mansa funds. It took a long time for me to agree because my background is banking. I started off with a bank which was called National and Release Bank, which became KCB. Then I left that. I formed my own bank in 1982, which unfortunately was taken over by the government during Moi's era. Then I also started an investment bank for some South Africans in the early 2000. So I know a bit about financing. Before I agreed to join SIB as an independent financial advisor, I had to do my own due diligence because I do not want to get clients who burn their fingers. And so I was very careful not to join SIB until I was quite convinced that it's the right thing for me to do. And one of the things that I'd like to talk about, probably two aspects of investing. And there's something I want to read for you, just a small thing. It says The Psychology of Money by Morgan House. It is not about who earns more, it's about who saves more. You can build wealth even with a modest income, with the right financial decision making. But without a high savings rate, it's nearly impossible. You can increase your savings by resisting the urge to keep up with others. Plus, the best thing about saving money is that it brings you options, flexibility, and the chance to wait for opportunities. It gives you time to think and the freedom to change your path on your terms. One of the things I found, especially in my banking career, is that we have people who are billionaire in assets. And unfortunately, don't have any liquidity. And to give you an example, recently, a friend of mine passed away after having cancer for 2 years. He's very rich in assets. But believe me, we had to do a fundraising for his hospital bill. And the reason for this is because people tend to be very rich in fixed assets, but they do not look after liquidity.
Some of those fixed assets that people hold?
Mainly things like real estate, or even investment in your own company, where you borrow money from the bank and you invest all your time and money in running that company and growing it. But to the extent that that company, if you really were in trouble, you cannot, you have no liquidity. And that is something that we seriously need to think about. And as she was saying, as Vala was saying a little earlier, you need to get into a situation where you have what I would call financial independence. And financial independence is where if you unfortunately fall sick, or a member of your family falls sick, and you have outrun your medical cover, that you don't have to go begging. Financial responsibility is where your child goes to university anywhere they want, and you can manage to service that responsibility. And I know it because when my 2 children went to university, I had to literally liquidate some of my assets. The other thing is you also want a situation where, as you grow older, you can do whatever you want to make yourself comfortable. Like you were saying, you don't want a situation where your car has no tires and you start worrying that you're going to get into trouble, you have no insurance. You need a situation where you can manage your daily expenses. And you need also some liquidity to be able to manage a bit of your own leisure, like playing your golf wherever you want. If you want to go to and play in Dubai, you know you can do it. That is what financial independence is all about. To be able to do that, you need liquidity, but money sitting idle doesn't help you. So you need to invest in something that gives you liquidity and gives you a good return. Now, the reason why I decided that I can get involved with SIB, having also worked in an investment bank, is I looked at the safety. SIB is structured more or less like the managing of a pension fund or the managing of what you call unit trusts. The assets that are invested do not sit on the balance sheet of SIB. None of the 30-odd billion is in the balance sheet of SIB.
Can you help us understand what that means exactly?
That means that they are managers. Like for instance, for the shilling fund, they have a custodian. Their custodian is I&M Bank, which is a first-year bank. For the dollar fund, the custodian is National Bank of Kenya. Which basically means that every investment that is within the Mansa fund, all those assets are held by the custodian. In addition to that, probably what I can do is, let's hold this one.
Maybe as you look for that next thing, a question that I can ask to follow up on that is, so when I decide to invest my money with Mansa X SIB, what will happen is I'll deposit that money into I&M Bank, and then what happens? How do they make the return?
Okay. Before I answer that question, I want first of all to state some of the roles, the fundamental roles of a custodian. A custodian is legally established gatekeeper between the fund managers and the investors, ensuring the safety of the investors' funds. And that's what I'm talking about. That in the unlikely event that SIB goes belly up, in a very unlikely event, it means that they have no access to your assets. Your assets are still held by the custodian, which is a first-tier bank. The custodian is in charge of settlements or delivery of securities to the buyer and investor. Basically what happens is that the manager, who is the SIB, once they decide to buy stocks or to buy bonds or to buy futures in gold, they give instructions to the custodian, who is holding all the money, who to pay. So they don't have access to your assets. The custodian warrants safekeeping, settlement, and reporting of these assets. The investment bank like SIB, their main function is centered on wealth creation, where the custodian is basically concerned with the protection, compliance, and administration. So that is a very major role, safety measure in guarding your assets.
So if I understand it correctly, this custodian is kind of like a prefect. They kind of look at what SIB has decided to do and make sure that that's actually what happens.
Indeed. It's your safety measure. It's a major safety measure.
Okay. So could you tell us a little bit about so we've understood the safety that the custodian provides. What are these decisions that SIB is making? How do they decide to buy bonds, shares, etc.? How are they protecting us in that respect?
Basically what happens is that you have the global manager, fund managers within SIB here, and because they trade all over the world, they have their counterparts like in New York, in London, in Frankfurt, in Hong Kong, who are experts in these fields from two fronts. One, they are traders who manage either the stocks or the bonds or the commodities, who they work with to tell them, to advise them on the best, what is best to buy at that particular time and what's the best to sell. In addition to that, they have another team of people that they work with who actually do only research, so that whatever you get advice from the people who is helping you to trade, you check that with the information you're getting from yourself as researchers and also your international researchers. So basically that helps you make a decision on two things. One, what do I invest in? Not only that, in how do I structure my portfolio in terms of percentages? What do I put in gold? What do I put in oil? What do I put in sugar? or do I put in a Eurobond in Europe, in a Eurobond in Africa, in Eurobond in America? So that helps you in that. So because basically you're looking at the returns and you're looking at the safety.
Awesome. So you've talked about a couple of different places that this money could be invested. You've talked about bonds in different markets. You've talked about futures. You've talked about sugar and that kind of thing. So is this a good thing or a bad thing? And how do we think about Mansa X? You talked about portfolio. Where does Mansa X fit in our portfolio? A lot of people here are in their 30s, maybe 40s. And you've talked a little bit about liquidity, retirement. Help us understand where it fits.
I think the beauty about Mansa X is, as I said, the safety. Let me just add something about safety. The other thing about Mansa Fund is that in addition to the custodian, you have what you call the trustee. And trustees are like your added safety in helping look after the interests of the investor. And the trustee primary role is to ensure that the interest of the investor is protected accordingly, and also there is no conflict between the investor and the asset manager. The other thing is the trustee ensures that the operations of the finance manager or the asset manager is not influenced by the people who are within that. They also carry out, both the custodian and the trustees carry out their own internal audits to make sure that the fund manager have the systems and also the knowledge to be able to manage the fund. In addition to this, the fund is also approved by is licensed by the Capital Markets Authority. And the Capital Markets Authority carries out monthly audits on all these funds to make sure that the fund is being run in terms of what it's supposed to be. Recently, the fund was accredited by RBA, Retirement Benefit Authority, which also now has to carry out its own internal audit because they're allowing pension funds to invest in Mansa funds. In addition to that, SASRA, which is the body that controls SACCOs, has also authorized SACCOs to be invested. And these are government regulatory bodies that look after the interest of everybody, from the small person to the big person. So you can see by the safety, by the custodian, by the trustees, by the government institutions, CMA, RBA, and SASRA, gives you that level of comfort to make sure that the managers do not mess up with your money. And we've seen this. Some people have lost a lot of money through institutions that were allowed to take deposits without this kind of controls. Mm-hmm. And that is basically the reason why I agreed to join as an independent advisor for Mansa funds, because I could see, incidentally, the word Mansa comes from a very interesting background. In the year around 1400, the richest man in the world was a man called Emperor Mansa Musa. He was actually an African from Mali.
Yeah, because the inflation.
And the estimated value of his wealth as of today, is probably worth about $400 billion. An African was the richest man, and that's how the name was coined, from the name Mansa Musa. So it talks of that kind of a situation.
So let me ask a question before we continue. You've talked about being an independent financial advisor, and you had to perform your own due diligence on SIB and on Mansa X to be able to work with them. So can you help us understand how exactly what is your role within SIB? and Mansa? What's your relationship to them? What does it mean to be an independent financial advisor?
To be an independent financial advisor is because of my background and my and the fact that I'm fairly reasonably well known by my peers and also in the financial sector, is to try and help people two things. One, understand what Mansa Fund is all about, its safety, and hopefully recommend to the people that I talk to invest in Mansa funds because of the returns and the safety. Of course, from that I earn a fee. So it's also my source of part of my source of income.
Awesome. Thank you. I think you were telling us a little bit more about the investment strategy. What they invest in specifically.
I think one of the other things that one has to look at is because both the shilling fund and the dollar fund, and more particularly the shilling fund, is the fact that quite a huge chunk of the assets that are invested in a fund are in offshore assets, and that helps you mitigate the loss of value in shilling. Unfortunately, the African countries and Kenya included, our economies are very fickle. You can see the dollar going to 150 one day, and the next day it's at 130. I remember when I started working, the dollar was at 7 shillings. The sterling pounds was at 16 shillings. Now you can see where it is. And some of that it has absolutely nothing to do with our own management. We have people like the IMF, the World Bank, and also other donor agents that have a very big role in what they decide our currency should do. As I mentioned earlier, if you want your assets to have a fairly stable value, you need, the world is becoming a village. You need your assets spread over several economies so that when one economy is not doing well or one commodity is not doing well, you have a way of mitigating those kind of circumstances where you have losses. So that's one of the reasons why I think the Mansa Fund is pretty good. And the reason why it has such a high return is because the funds in both the shilling and the dollar fund are managed on a daily basis, continuously. And one of the things that people don't realize is the biggest return, even at a time now when the stock market here is really on the way down, there are people who are still making a lot of money from securities, rather shares, quoted shares. For instance, if you today bought a share at 10 shillings, and 1 week down the road you said it at 12 shillings, that is 20%. If you annualize that, you multiply that by 52, you can see the kind of annualized return. So when you have an active portfolio, you're able to buy and sell on a continuous basis to be able to make returns on a daily basis. And the same with commodities. You do that on a continuous basis. And the same with bonds. You can actually discount bonds you can actually, one of the things that people don't understand is there is an inverse relation between the interest rates in bonds and your earning. When the rates are going up, you actually lose money if you discount bonds. When the rates are going down, you make money. So these are the things that managers do to make sure that they are trading even in bonds and securities is on a continuous basis so that they're making money every single day. And when you invest, whether in shilling or in dollar, your 1 shilling or your $1 has got a complete combination of those assets. And when you want to know the value, all the assets are valued individually to get you the total value of that of the fund. So that's why it makes it interesting.
Okay. So basically what's happening is SIB has a bunch of traders and analysts and research people who are figuring out what to buy on a daily basis and making sure that they're making a return on each trade that they make.
Absolutely. And this is done on a 24-hour basis because the places you're investing in are open when we are asleep. But the people that SIB works with in those markets are continuously looking at what is happening in the market. So the fund is actually managed on a 24-hour cycle rather than here where we probably have a 10-hour working day. So it is continuously managed by those people outside who are working with the SIB fund managers here. So it's a fairly interesting, and this doesn't just happen in Kenya. This is something that is happening worldwide. For your information, like the funds under management in the US is $60 trillion. In Europe, it's $20 trillion. Some of you might have heard recently of a company called BlackRock, which is controlling a lot of things that are happening in the financial markets worldwide. Their managed assets are $12 trillion. So those are the kind of, and in a small way, SIB is part of that international managed funds assets in a very small way. So you basically what SIB Mansa Fund does, it takes you from Kenya to the global markets.
Fantastic. Thank you so much. I think we'll take questions about safety and the strategy at the end, and I'll come back. But I'd like to invite Carol to tell us a little bit about how do we think about Mansa X in the context of our lives. I think that's a question a lot of ladies had asked me even before this conversation. So is this where you put your retirement money? Is this where you put school fees? What do you use Mansa X for?
Allow me to mic you.
Okay. So I'm very happy to be here with you, and I'm excited to have this conversation with you. My name is Caroline Chelangat. I am a relationship manager at SIB, which is Standard Investment Bank Global Market Division. And my role basically is to advise clients on how to invest. And sometimes I tend to be biased towards Mansa X, but many times I try to be very, very objective because I know out there are also a lot of other investment opportunities that clients can actually look into and benefit, because we also have to diversify. Yes, so to the question she's asked about where to place Mansa X in your different portfolios that you're looking at. Mansa X, first of all, is very, very flexible. It's a very flexible fund because it allows you to access your funds whenever you want it. I think the two major benefits of Mansa X is the fact that it gives you a good return and also gives you access to your liquidity. For me, liquidity makes a lot of sense because it gives the security of mind that in case of anything, whatever happens, my money is within reach and easily. We are able to pay you your requests of whatever amount you want from your fund within 2 working days. If you're taking a partial withdrawal, meaning that you're leaving some funds in our fund, and we are able to pay you the full withdrawal if you are within 3 days. If you're taking the whole of your fund, it takes us 3 days because we have to do a valuation of whatever we have invested in. As Mr. James has said, we do a valuation of your fund and give you the full amount of what you have earned to the day you are leaving. That said, then should I put in my money for Mansa X for the long term or for the short term? When you look at the liquidity, then it gives you the short-term feel of investment because you're feeling like your money is easily accessible. So even for that emergency fund, that really needs to be accessed anytime that you need. then Mansa X fits in. As long as you have finished the first 6 months, which is the initial lock-in period, we ask you to let your fund stay with us for the first 6 months so that you are able to trade with it and actually give you a return. So you can actually choose how you want to use Mansa X. Do you want to use it as your emergency fund? It will still work well with you. Some people would want to use it for their long-term savings towards retirement. The beauty about Mansa X, with a good return of we are currently at an average of 17.6% net after fees and after taxes, then that means your fund is able to grow by the same amount you invested in about 4.5 years. So even if we did not do very well, we are able to actually grow your fund. If you put in 1 million today, in 5 years, you'll have 2 million. So if I'm looking at a long-term saving, if I am 30, for instance, and I put that money for 5 years, at 35, I have 2 million. That 2 million will grow to 40. It will grow to 4 million at 40. And at 45, you will have a double of that, which is about 8. And at 50, you have 16. So you can actually put in some money there and keep it for the long term. I have some couple of clients in my portfolio who actually have 2 accounts. One account for their project, savings towards a project. I want to probably buy a plot or something. And I am putting in 100,000 whenever I get. But I've also put in this fund of this much that I'm going to keep it until I am 50 or until I am 45, depending on when you want to retire. Because, when you're still young, you have the advantage of time. The advantage of time is that your money will actually grow by, the compound interest really multiplies your money. So you can actually save some amount and it grows miraculously over 10, 20 years. But also now you have to be very disciplined, because with Mansa X, it's not like an insurance where you're not allowed to break. If you send us instructions, we give you the money. So you have to have the discipline to let the money sit with us and allow us to use the money to trade and make money for you.
Thank you, Carol. First, I'd like to say, just because we are finance people, that compound interest is not magical, it's not miraculous, it's just maths, it's just strategy. But to just follow up on what you've told us about how to think about it, I really want to address this question of 1 year it's 24%, another year it's 18%. So is it really where I should put all of my retirement money, or is it some of it? Just help us understand how to deal with this up and down that we see.
So the reason why we give different returns every year or even every quarter is because we are a trading fund and our return is market determined. So we will not come here and tell you that we will give you 16% this year, or we will give you 20% this year. We will take the funds, we go to the market, do our trading every day, return whatever we return, because we are a trading fund and some of the instruments that we trade in probably are volatile. So different days are different with different returns. And even sometimes we could actually burn our fingers in some trades, and that is very normal. We do have stop loss limits, for instance. If we have gotten into a business and we are losing money by a certain percentage, our traders have their stop loss limits for the days and for every asset, or even for every trade that we are doing. So we have a deviation risk that is allowed, and then we say we are taking this loss and we'll make it up with another profit from another asset. So that is the reason why we have different returns every quarter. So you will find that even in that fact sheet, there are quarters that we have a 4.7%. There is a quarter that we actually had a 2.6%, which is an equivalent of about 10.08% per annum net. We have quarters that we have, like the last quarter that we did, we had 5.6%, which is about 22% per annum net return. So this is actually just a factor of how the markets were in that season. To answer if you should put all your money here, as I said before, diversification is very important. So even as you put some money in Mansa, you should also consider other baskets of investments, because we actually have several. You could pick 3 or 4. You don't have to pick so many investment opportunities because you will get lost. So you could just pick probably 3 or 4.
Asante sana. So you've told us that sometimes you make trades and you burn your fingers. And of course, we're not the ones managing this money. But we'd like to know if you're considering other opportunities in the global markets, or if you're assessing Mansa X, what should we be looking at? What are the things that we should be asking? When guys call you, what should we ask? How do you do due diligence on an opportunity like this if I'm comparing between Mansa X and say another thing, so that I know which one is better?
So for me, if you are doing your due diligence on an investment, first of all, I look at the regulations. Who is your regulator and how accountable are you to your regulator? What is the deviation risk that your regulator allows you to go? How do they audit you? How long? How often? How is your diversification portfolio like? How is the mix? If you look at our fact sheet, you will realize that most of our assets are actually below 5% in terms of allocation to every asset that we have, because diversification is key. Because if anything goes wrong in any asset, then the amount of loss that it gives to the fund is actually going to be lower than what the other assets is bringing in terms of profits. So we'll still be able to actually return a profit even if we made a loss in another asset. So we also have an investment committee within the bank that looks at what the traders are doing on a weekly basis. We also have, the traders are given their stop loss limits per day as well. And we're also trying to just have them understand their markets so well. So as you look at what to invest into the global markets, I think those are some of the things you need to look at. Yeah.
Awesome. Thank you so much. Are you guys feeling like global markets are demystified? Yes or no? Ish. So let's take some questions. I'll take 2 from this side first, and then we answer them. Then we take 2 from this side, like that. And hopefully we'll be able to take 6 or so questions today.
For the hurdle rate, our management fee for managing your funds and making for you money is 5% per annum. That is a standard management fee. So by the time we are declaring to you 18% like last year, then it means we made 23% after tax. Then when we take away our 5%, you get 18%. Now we have what we call a hurdle rate. Every fund has a hurdle rate, which means it's a target that we are working towards. Our hurdle rate is a gross or a net of 20%. If we were able to deliver, for instance, 26% in 1 year, then we have surpassed our hurdle rate by 1%. That year, then, we are going to pay you the first 25%. We take away our 5%, so you get 20%. And for the extra 1%, which is probably, if we are investing $1 million, that would be 10,000. Then we are going to take away 1% of 10,000, and you take away 90%, which is 9,000. So that way, we are actually profit sharing on any money that we have made above what you expected us to make. Okay, so when do we pay out? After the initial 6 months, that is the lock-in 6 months, the first 6 months of the lock-in period. Anytime we give you your statement, then you can give us instructions to withdraw whatever you need. So our fund earns daily, vaguely, for the trades that we close every day. It earns monthly for the trades that we'll close in every month, because we have some, like we can buy shares and we will get dividends in 3 months. So that's when we'll realize the profits. Or we'll sell them in 6 months. So that's when we'll realize that. So for every trade that we close every day, we actually allocate whatever we make to your fund, and we add or subtract depending on how the markets work. We also subtract our management fee every day, but we report quarterly. So every end of 3 months, like we did our reports end of March, we'll do the next reporting end of June. So every end of the quarter, we actually report to you and to the CMA what we have done. Then it's up to the client to ask whenever they need money. If you don't ask, we continue trading with it and continue making money with it as assets under management, which will change every day depending on how the markets work. That 1% jump is just purely market determined. It was good markets for us. Just the same way there was a 2.6% that last year, was it last year or the other year? Because, yeah, the other year, because of, there were some talks about recession, I think, and we had some stocks that probably were valued lower than what we had expected, because that year we had a good run for the first 3 quarters, and then the last quarter really was not good for us. But even as we did that, we were still able to still maintain a good return because we were able to make 15.59% for the whole year. But as we've said, this year we started on a high at 5.6. We are hopeful that we will continue like that. But then again, we cannot really say with affirmation that we will actually remain like that. But we will try. Yeah. For the USD fund, we are at an average of 12. We have had this year we have done an average of 13.5. So our average return for the USD is 12%. The average return for the Kenya shilling is 17%. So it's not the same. But for the USD, it's recommended if you are doing an investment for the long term, because it safeguards against the depreciation of the Kenya shilling in the long term. So it has some preservation of value if you're going to save for a very long time. Choice of portfolio, we do not allow you to choose what to invest in. We choose what to invest in, and the reason is because we have traders who are qualified to know what to invest in. We also have information, and we actually actively look for that information, because the global markets are actually determined by everything, including even a word from maybe the US president and everything. The ripple effect can affect the portfolio or affect the business. So we have to be very responsive. The deviation, whether we have an insurance, we do not have an insurance, but what we do have is a limit by CMA on how much deviation that the fund can go. So if we open this year with a fund size of 30 billion, we are not allowed to deviate to 75% of that at the end of the year. Okay, so deviation means the losses that we can go to. So we are not allowed to go beyond 25% of the assets under management at any one point for over 1 year. And losing 25% over 1 year will actually give you time to see the losses coming down as we continue, because if today we are saying that we are doing 17%, and the next quarter we are reporting that we have actually done 10%, then the next quarter we say that now we are giving you 2%, then you should be able to say, I want to fit. Because again, the advantage of Mansa X is that it is very liquid and you're able to leave the fund whenever you want to. So if we were to go to 0 and then deviate to negative 25 of what we had at the beginning of 1 year, then we are supposed to get back to our clients and say, look, we had 1 million at the beginning of this year. Say even you had $1 million before, so we had 1.2 at the beginning of this year, but we have actually lost 75 with this. So we are going to give you back the balance, and then you can take it out. And this is normal because no investment has no risk, literally. But at least we have the benchmark, the much we can go. So for taxation, we pay the taxes because Mansa X invests in several asset classes that attract different kind of taxes. So for any income that does need to pay interest, for instance, like the bonds, we pay the bonds as Mansa X because it's Mansa X that has earned. For any derivatives, we have a tax for derivatives as well. We have a tax for collective investment schemes that is paid by Mansa X. So by the time we actually come into the market and say we've done 23%, we've actually paid. We don't withhold anymore. So if we tell you we've done 17.6, then we've done 17.6. That's what we're giving you on the statement, and that is what we can pay you if you want to take out the money. Okay, so yes, we take money in the Kenya shilling and we trade in USD, for instance, because we trade in global markets. So for us, how we actually hedge is by doing the currency hedging. Most of what we do, even in currencies, is actually hedging. We again do not do speculative trading, we don't do gambling. So our traders will basically hedge either the dollar against the Kenya shilling or the Kenya shilling against the loss of value. And again, right now we actually have the dollar fund, so sometimes we actually have money in dollars that we are supposed to deploy in the market. So yeah, we basically hedge. That's our job. Hedging is our job.
Please explain to us what is hedging.
So hedging is actually taking a position. Like for instance, you can do a contract with the bank, for instance, to say we are going to, for this time, we are going to be buying the dollar from you at this price for the next 6 months. So we lock in a price. Whether the dollar will go up or come down, for us, we've safeguarded our price within the limits that we know we'll still be able to make money for our clients, or rather we are not losing anything. And then we trade. So if the money goes beyond, or if the cost of the money goes beyond what we had locked in, we do not go to that price at that time. We continue with the price that we had locked in. That is hedging. We lock in a price for a period of time.
If you look at the returns that have been there, the shilling fund started 5 years ago in January 2019. If you look at the returns that have been there for the shilling fund, the returns are way beyond inflation. And if you look at the dollar fund, not just the European or the American inflation rates, which are very low, the rate of return even on the dollar fund is actually beyond our Kenyan inflation, which basically means that you have a net earning value, because if inflation is 6% and you earn 12%, it means that you have a net earning of 6%. So far, the fund has earned above the inflation rate, and that's the whole idea of managed money funds or managed global asset fund. One of the things that the fund manager aims to do is obviously to beat inflation, because if it doesn't beat inflation, it means you're losing value for your money. And most of the fund managers that have multi-asset base, depending on the mix of the portfolio, you will find that if you have a good fund manager, they will always beat inflation. I think at the moment, Mansa X is the best performing managed fund. And if you look at the return of 24% in last quarter for the shilling fund, even the highest bonds that the government has sold, the long-term bonds, nothing has touched 24%. So at the moment, in terms, whether you look at the dollar fund, whether you look at the shilling fund, Mansa X is actually performing very well. And I think at the moment, it's the best performing managed fund in the region. And as I said a little earlier, I think in addition to one of the things that people worry about is if you hear a return of 20% and you start thinking, this is too good to be true. But as I mentioned, one of the things that made me join SIB as an independent investor is because I looked at the safety measures that they have put into place to make sure that there is outside SIB, you have the trustee, you have the custodian, then you have the government regulatory agencies that actually look after that fund and audit. At the time that RBA was formed, that's the time that I was bringing in the African Alliance, which was an investment bank from South Africa. One of the problems that was happening before RBA is that all retirement funds were being managed by the employer, and there was a lot of abuse. So this is why there was a structured Retirement Benefit Authority Act to make sure that the person who manages the fund and the person who keeps the funds and the person who is collecting the money, the employer, are all independent so that each has a role, and the function of that was actually to protect the investor. And this is the way that these structured funds, which under RBA, are managed. The most important thing is to ensure that the investor is protected from a rogue manager. For instance, if today the chairman of SIB, James Wangunyu, instructs INM to pay for his 500 Mercedes, they will not do it. If they did it, because they have legal fiduciary responsibility, they will be liable for allowing that money to pay something which is outside the purposes of the money fund, and they will not be protecting the investor. So that's a very important aspect that you need to look at.
I would like to add on that, as we try to place Mansa X and a certain space in the investment spectrum in Kenya, I think what we have is we have what we call a money manager license, which is basically a license that allows us to collective investments, just like any other money market. But we are a special kind of collective investment scheme because we are allowed to invest in more assets and in bigger geographical area, basically everywhere in the world. So this license gives us a different opportunity. And therefore, it would not be very fair for us to even compare ourselves with money markets when we are saying that we are the best performing. Yes, we are, but we are not comparing ourselves with your regular money markets because where they are allowed to invest is different from where we are allowed to invest. So as such, we don't have a competitor in Kenya at the moment. But there shall be others because this is a license that is given out by CMA and can be given to any other company that can demonstrate ability to do what we are doing. So in the future, we will have competition. In the future, we'll have several funds like this. But for now, we are still just enjoying that space of being a monopoly. And we are taking advantage of that. We have other funds like this across the globe, like the BlackRock that he mentioned. Those funds give very good returns. Exceptional returns, and some of them give very good returns because they are not regulated. The good thing with Mansa X is that it is regulated. It is actually a hedge fund, but a regulated hedge fund. Some hedge funds are not regulated, and they can give as good as 60% in a year. So it also depends on your risk appetite as individuals, even if you're considering investing in such offshore investments. Thank you.
Awesome. I think we'll end the discussion there today. We've gotten a lot of information, and I want to attempt to summarize what we've had. So we've been told that the global investment space is massive. There are companies like BlackRock that are managing $12 trillion. That is 4 times Kenya's economy. So there's a big opportunity there. So even as SIB is managing 31B, it's really a slice in a very, very big pie. So there's an opportunity there. The second thing we've been told is that it is safe. They've taken a lot of measures to protect you as an investor. As a money coach, I will say use your discretion. Understand the product so that you can make a decision about what you will invest, what kind of money you will invest in Mansa X. I think Mansa X is a very innovative solution, but I think everybody needs a diversified portfolio. So that means that you need to invest in several different things so you can spread your risk. The third thing that we have had is that these guys are doing something that hasn't been done in Kenya before. So if that's the kind of thing that you're interested in, this is where to go. So if you're still wondering where to start, I think they've shared their fact sheet. You can reach out to them and ask them even more questions, and then make a decision about where this fits into your overall investments, into those 4 things we talked about. Protecting yourself, making sure your retirement is secure, enjoying your life, and leaving a legacy.